welcome. This is a picture of Mr. Justice. I'll talk a little bit about him today. He's been in the market for a while. He was named like Coach of the Year back when he worked for Rich Dad Education. I'm not sure if he does that anymore. He runs a podcast that I've been on a couple times called Tackle Trading Justice, I believe is what he calls it. He can correct me if it's wrong. It's a great podcast, though. If the thing I like about it is it's really, really good, and it doesn't take itself too seriously, if you know what I mean. So you should check it out. He's the founder, I think, of Tackle Trading. Or he's a trading coach, I'm sorry, at Tackle Trading. So I'm going to totally mess up your bio. Anyway, Tim, come on in here. The other thing is he lives just down the road. He's maybe about 10 or 15 minutes away. So nice guy. In any case, Tim, what do you have to say for yourself?
Well, I've got a lot to say, Jeff. First thing that I will tell you is that that was a very, very awkward introduction since you tripped over about 3 of the things that I do. But that's okay. That's okay. I have no problem with that. I'm just excited to be here. Let me go ahead and bring my screen up, and let me know if you guys can see this okay.
We can see it just good. We can see it just fine.
All right, very, very good. Okay, now guys, let's set some expectations for the room and what we're doing, and for today's presentation. Number one, I'm planning on 30 to 45 minutes of formal presentation, then some time for Q&A. It's entirely dependent on you guys, you know, the kind of engagement you're giving me, and if you've got questions, I'm happy to stay around and hang out. We will not go past an hour, so you can plan your schedule, plan your time. Now, one requirement I always have whenever I do a presentation, I've been doing these for a very long time, is engagement with the class. So I see 29 people that are in class. In the chat, not the Q&A thing, I want you to post something. Post where you're from. You know, everybody find the chat window inside GoToMeeting. If you're doing 2 or 3 things at one time, focus on our presentation here. Let's bring you into class and find the chat window and post something in the chat. Let me know that you're here. Let me know that you're engaged. Let me know that you've got questions. You're ready to go. And Jeff, I don't know if we've given them chat privileges. I've got Q&A. We got hello. We got a bunch of stuff coming up here. Let me check the questions. Very good. Loud and clear. Picture not showing. No picture yet. I'll show you a picture of me here in just a minute. Then we've got Berkeley, California. What a great place. Toronto, Scott. Great to have you. Fort Worth, Texas. You know, the first thing I'll say before we go too far down the rabbit hole here, number one, is it's a great privilege to come and present to a crowd and a team, you know, like MetaStock can put together. When I think of, you know, Thomson Reuters, when I think of MetaStock, I mean, these are tools, and these are the real diamond jewel, you know, the crown jewel in terms of trading, in terms of data and software tools and back testing, and I'm very, very excited to be here. I've been in the market for 12 years. I've been a trader. I live here in Utah. Like Jeff said, I work from home. Today, after the Federal Reserve announcement on interest rates, you know, hit you know, the bell, and I went for a bike ride. You know, it's beautiful, and that's the real joy of being a trader and having the financial freedom of doing that. Let's make some money. I agree with that, Peter, for sure. Oregon Coast, Washington D.C. Great. Now, the next thing I need to know before I go too far, because I've never taught to a MetaStock audience before. On a scale of 1 to 10, how much do you know about trading? On a scale of 1 to 10, how much do you know about trading? Stuart, excellent, 9, 6. So there are some things that I could probably, 9, 6, 8, 5, got it. 10, lots, been doing this a long time, 8, okay, 8. Now, what product do you focus on when you trade? What product do you focus on when you trade? Options, toss, futures, options, got it. Okay, options, very good. Options, options, options. Stocks, candlesticks with options, futures and options, wonderful. All right, gives me an idea of our gauge here, and just let me know as we go. You know, I've probably, put a lot of time into this stuff. It's a great career, and I enjoy it very, very much. Now, I'm going to minimize this. I have used GoToMeeting many, many times, but not nearly as much as Adobe. So if I miss a question, in the short term, I'll come back and double check them as we go. Number one of the main things that we're doing is we're building a community of traders over at Tackle Trading, and that's who I'm representing here today. Tackle Trading and MetaStock are, working together, and it's kind of a bridge relationship we're trying to bring together here. Tackle Trading, simply traders from all over the world. You guys know that traders can get lonely. When you don't have your neighbors and your buddies all trading, you kind of have to go online. I have an honor code when it comes to my presentations, and there's no violation of this, period. Number one, participate. We're here to help each other. We're here to share ideas. A great thing about the markets is that I can give you tips that I use, and I can give you, examples that I use, and it doesn't affect my profitability. The market's just too deep, too wide, too liquid for that to saturate it. Frankly, small traders, doesn't matter, I don't care how much money you're working with, you're not Goldman Sachs, and any of us individual traders out there, I mean, we got to band together. So participation's number one. Number two is have some fun. I mean, we're not here to turn this into a lecture like we're in an Ivy League school or something. So questions are welcome, conversations welcome. We definitely like to have fun. That's one thing I believe in life. And then no negativity. If we're here for the right reasons, we build each other up. Everybody agree to that? Everybody agree to those three rules? Number one, before we go too far, can you agree to those three rules? Oh, and I'm still trying to figure out how to work all this. Questions? And let me look at. Yes, 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 lots of yeses. Okay, very good. Okay, very good. Okay, education is something that you and I know that can change, the market. And options education is something very intimidating. I'm going to give you guys a challenge, especially a very veteran group. I really believe we have an opportunity together to change people's lives. And if you guys, what you're telling me, 6, 8, 9, 10 in trading education, you know that trading is hard. But it's not undoable. You don't have to be an engineer. You don't have to be a computer scientist. You can be, but you can be from any background. My background really was in history and political science. I got into trading kind of happenstance. With the right attitude, right mindset, right approach, people can learn to do this. And so I think we should be encouraging people who want more control of their retirement accounts, their income, to get into trading. I really believe as a community, as something, in this world, we should be promoting financial education, just like the greats Peter Lynch and Warren Buffett are. As the type of traders out there, come into the market, we have to really approach it in different ways. Now, out of the 4 basic types of traders, and these are the ones that I will identify. Now, there are other more advanced ones like scalpers and automated traders, people who build systems, using, generators and whatnot. Day trader, swing trader, position trader, or investor. Which one of those describes you most accurately? Okay, what would you say? Which one of those describes you most accurately? 1, 2, 3, or 4? Day trader, swing trader, position trader, or investor? So I'm seeing swing, okay. Swing trader, day trader, swing trader, sometimes day trader, position trader. It's interesting, as I go through the marketplace, one thing that I've found, quite frankly, is that we all can adapt and change into different roles. I really firmly believe that if you're going to be a dynamic investor, you should have the ability to day trade. You should have some kind of swing trading strategy, a position trading strategy, and an investor strategy. Whenever I have a new student come into my class, or when I work with somebody as a consultant or a mentor, and I do that with Legacy Education, that's Rich Dad, Robert Kiyosaki's group, that does the education. Whenever I do that, mandatory reading for them, number one, I've got a list of about 20 books, but number one is Trade Your Way to Financial Freedom, Van Tharp. And Van Tharp, through systems testing and the promotion and the idea of position sizing and whatnot, through that book and his seminars, things he does, he always talks about having different systems for different market conditions. So if you've never really day traded, I want you to ask yourself, well, why? I mean, if you have the ability to sit down and hit ROI targets, you should have that skill. If you've never position traded, you should ask, maybe I'm not using the right product. So one challenge I would give any investor as you're building systems out, have different time frames and different systems that apply to different time frames. As market volatility changes and as market conditions change, we can definitely start to change that. And I understand that, Frank, but that actually is the reason why you probably need to develop those things out, right? Frank says full-time job gets in the way. I get that, but that's where we have to learn to make money while we're gone. I love cash flow in that regard, and that's actually going to apply to a lot of what we're talking about here today. So once you think about it, no matter what kind of trader you are, there's probably some way to adapt and build a new type of system into your trading. And I really think they can always fall into one of three areas. A cash, a cash flow strategy to me is something where you engage the market, you make money either from the passing of time, time decay, theta decay, dividend payments, automated trading systems, things where you don't have to be there necessarily for the trade to execute. It could be a Vega trade, it could be a theta trade, it could be an automated system using an EA, an expert advisor, whatever it is. That to me is cash flow. That's using other people's time. That's OPT in the market. Growth is where you engage the market through business, property, all that kind of stuff, long-term investing. And then speculation is your Forex futures, leveraged options, other specialty products where you day trade, scalp, and that kind of stuff. As I approach building portfolios and building different business designs, I like to use all of the different types of components. By the way, this is me. Everybody say hi, Tim. I think Jeff had a picture up earlier, but I'm not sure if it came through. And yeah, got a hand up here as well. I live in Utah, and you bet, it's great to be here. Living in Utah, working from home, being a trader. I'm 37 years old. I started when I was 25, and I've never had a 9 to 5 job, guys. And that's a very powerful thing to say. It doesn't mean that I know everything about the markets, because I still learn things as well, even after 12 years, right? And I love this stuff. So just we get to know each other. Hopefully, we'll build these out, and I can proudly say, Jeff, that I'm part of that MetaStock community, because I know that you guys are the best out there. And these are some of my partners, my brother, Noah, Gino. These are coaches we have at Tackle Trading over there. As I build my teams out, I always bring veteran mentors on, people like Tyler Craig, who's traded for 15 years since he was at 19 years old. Keith King, who actually worked on the Boston Stock Exchange, processed probably well over 1 million transactions as a market maker for the better part of 2.5 decades. Brad May, young man I mentored recently, who actually is now trading full-time, trading volatility strategies in the options market. We're building these teams out with mentors. Now, you guys told me that you're fairly experienced, so I want to talk I want to skip forward here, and let's talk options for a minute. All right. What is your option strategy? Let me ask you. I need to get to know you guys a little bit. So what is an option strategy that you feel like you are, proficient at, that you know what you're doing? Okay? What is an option strategy that you feel like you're proficient at? Credit and debit spreads, okay? Vertical, Frank, is what I'm guessing. Debit spreads, puts and calls, gotcha. Very good. Calendars, I like time spreads, Peter. Good. Now, if you've never traded options, type in no options. Let me know if you've never traded options. So how many? We've got 31 attendees. I'm guessing not everybody's an expert here. So if you've not traded options, or at least not traded them well, type in need more options, or all that kind of stuff. So Nyan, so you want to say credit spreads, but you've not been successful so far. Gotcha. Makes sense. Need more. Gotcha, Trey. So you need a system. Okay. Need more options, need more options, need more. All right, gotcha. So we got some people who have good systems using spreads. We got some people who don't. The one thing I'm going to tell you is, quite simply, most traders who trade options, they trade spreads, or they sell options. There are different components in the options market, But you rarely are going to find traders who simply buy a call or buy a put unless they have a very specific gamma scalping strategy and are consistently profitable. Calls and puts, when you're long the contract on their own, you're negative time decay and you're running against the wind. In fact, when I went biking today, I was biking first against the wind. It was a lot harder going out halfway for a half an hour than it was coming back. So you don't necessarily want to buy options, and the nature of the contract as a seller, yes, you do have an obligation. And let me explain something very, very basic. Those of you who've been trading spreads for a while, you do know this. When you sell options, you tend to take on more risk than the potential reward you can make on any one trade. So type in more risk. So let's make sure we understand this. There is no such thing as a free lunch. There's no such thing as reward without risk. So if you are going to be a seller, and you're going to take the opposite side of the transaction, which is cash flowing with options, there is more risk in selling those options. There's no question about it. But that's the whole point. I was teaching a group last night. In fact, I was even kind of explaining this very basic concept. I told them, guys, the whole reason why a seller gets paid is because they take on more risk. That's the nature of probability, okay? This simple graph here explains the philosophy I have behind selling. See, if I buy a call option, there's only one green arrow. The only way I can make money is if it goes up. I can't make money if the stock goes nowhere, if volatility falls, if time passes, or if it goes against me. If I buy a put option, I can only make money if it goes down. I can't make money if it goes nowhere or if it goes up. So I only have 1 out of 3 scenarios where I can profit. Now, there are systems that can do well with that. I mean, you don't have to win every time to have a good trading system. That's not what I'm saying. But what I am saying is that when you're new to trading, and if you've not been profitable with options, or if you just want to increase cash flow or income, the sell side of the options market is what I've found more people have learned to consistently generate some of that income from. Now, there are risks, and the biggest caveat comes down to money management and also trade management, which is what we'll get into in a minute. I love a lot of things about the options market, but simply put, I love the fact that they are more complicated. I will tell you this, teaching all of the different content. I work in the Forex market. I work in the futures market. I trade options on futures. I trade stocks. I don't think markets are overly complicated. I think the human brain is. I think our psychology is. I think that whether or not we're disciplined enough to do something, that's a completely different question. I've loved all of the products in the market. As I've learned it, I've gotten into every corner of the market. I firmly believe the options market, from a definitional standpoint, a contract standpoint, the way that they work, guys, they are the most complicated, in my opinion, because you have to deal with volatility changing, you have to deal with time decay, you have to deal with interest rates, you have to deal with gamma scalping, you have to deal with getting filled in a market that is not as liquid, say, as like the Forex market. Now, all of those things, though, might sound like a turnoff. I actually like that. The fact that they are more complicated, as I build systems, I feel like I have an edge, right? I mean, you are trading against a pool of traders after all. And when you want to profit from the market the way that you do profit, you have to believe you have an edge over other traders. Through money management, discipline, execution in the options market, there are these niche areas where I think that you can carve out a good exposure to the market. There's so many different things when it comes to contracts, but what I'm going to do is I'm going to give you a few basic rules that I live by when it comes to buying and selling. Number one, buyers need to buy 2 months or more. And there's a concept we call pay. One of my mentors, who Jeffrey actually knows, Jeff Crystal, he taught me this concept. Pay stands for potential average yield. So guys, type in 2 months plus, right? If you're a buyer, you need to buy 2 months plus. Now, sellers, the sweet spot for me, through my back testing, my own experience, is 4 to 6 weeks of time. There are times I will sell 1 day. There are times I'll sell 4 hours. I mean, I'll day trade a credit spread. But I've been doing it 12 years. I don't recommend beginners go less than 4 weeks. One of the most common mistakes I see with new traders, and guys, I've been evaluating people's trading behavior, their results, what works, what doesn't. I'll tell you, I've been evaluating it for many, many years, and one of the basic mistakes is over leveraging. If you over leverage position sizes, I don't care what your strategy is or what your product is, you probably aren't going to be long for the market. Okay, that's number one. Number two is they pick the wrong basic time frame. They'll go shorter in time because they're cheaper, or they think they can make money faster, not realizing that they're adding variables to their system that just make it not work. I've done enough back testing in my days. One of my things on my weekly routine. Do you guys do back testing? You do back testing. You know what that is? Back testing. Type in yes or no if you do or do not do back testing. Data testing, data analysis of your systems. Give me an idea. Let's slow down right now. Get some engagement back here. Yes or no? Yes with futures. Yes, Michelle. Good. No, Frank. So good. All right. Okay, so I've got 3 yeses, 1 no. Let's think here. Okay, good. So mostly yes, some no's. Got it. All right. Okay, now here's a basic standard. If you're going to trade anything, you need to back test it. There's no question about it. Any system, any strategy, any variable can be really refined. And every week I'll spend at least an hour or two back testing. I usually do that on the weekend. During the trading week, I'm usually just focused on execution. On the weekend, when I go through my weekly routine, I spend a couple hours on that just as a point of order. I think traders need to run numbers, just because. And what I've found is 1 week options, 1 day options, 2 week options, without a high degree of management skill set, shouldn't really be traded. So if you're a beginner into cash flow with credit spreads, things like condors or vertical credits or whatever they are, then you need to avoid that. Strike price rules, okay? When I buy, I do buy in the money at 6 delta. I've not found an 8 or a 9 delta is any more favorable. When I sell, and I want you to write this down, 0.10 delta. Here's what I've learned. Traders try to make too much money. I get it, right? Traders try to make too much money. And the reality is, I get why. Our greed takes over. We look at an option chain, we build a credit spread, and we say, well, if I go closer to at the money, I can pick up an extra dollar credit. Well, then you're radically changing the probability. If you've not back tested and designed the differences between those two things, you're probably getting too aggressive. A 10 delta credit spread, actually, to me, usually is the sweet spot for balance between cushion and probability and return. We'll show you how that works here in just a moment. And really, it comes down to picking a type of strategy. In the way that we teach, in the way that we do things that tackle trading, we break things into families. Delta, theta, vega, gamma, and rho. Now, this formula in front of you is called the Black-Scholes model. Everything in an option trade has to be defined. Now, I know if you don't trade a lot of options, this can intimidate you. Let me rest you assured, you don't have to recreate these rules if you get good rules for a strategy. These should already be properly designed. What delta you're going to use for every strike always needs to be kind of factored in, delta'd in. You need to know what it is. The time decay for your option, you need to know if you're doing 1 day, 7 day, or 30 days. Vega, gamma, and rho, those are more advanced, but volatility impact should be measured. You should know the volatility cycle. Gamma is a function of how much time you play in general and the delta, but you need to understand that risk. And with interest rate in the market, we knew the Federal Reserve came out today and said we're going up over the next year. But interest rates in the market have been so low, their variables haven't really factored in too much lately. So let me skip forward here. I was thinking about what to talk to you guys about today, and I decided to do you guys a big solid. And I decided to show you guys a strategy that I use and my students use and our system has evaluated and tested, and it's a really good one. It's called a condor, and it's the specific nature of how we trade a condor. Would you guys like to learn an iron condor strategy today? Is that something you would want? Oh, I'm still trying to find all the chat and everything and go to me. So we've got yes, yes. All right, so we got chat, and then we've got questions. And so most of you guys are answering questions. So yes. So Frank, that's okay. We're going to do it anyway. Yes, sure, sure. Yes, yes, sure. Gotcha. All right. Gotcha. Now there's futures on options, there's futures on or there's options on futures, I should say. And actually, it's not. No, it's not. The nature of how these work. Now, by the way, if you've not tested these or you know how to execute them, none of you, not a single one of you, should trade this live in the market without testing. I will recommend that you go into your own manual back test, you execute it with data, you go in through MetaStock and Icon, and you kind of evaluate how these systems work, pick the right stocks, understand your products. We all understand, coming to an event like this, you get excited, you want to go out and trade. But guys, people who just take tips from anything, including like a newspaper, and go out and trade them, that's a mistake. Those aren't really disciplined traders. So you do understand you need to do your own research on how these results come in. Yes, we understand how this works. I know that we have to always say that, because if you've never really tested a strategy, just because you hear it doesn't mean you run out and trade it right away. Now, what a condor is a bull put spread and a bear call spread on the same stock at the same time. That's just the definition. Any quick Google search, you can figure out what those two spreads are. We have more information in the market now at our fingertips than ever before. Problem is, most people don't do well with condors because they don't design the trade properly. Okay. Really, the simple idea behind a condor is that you can generate income off of other people's fear. And let me explain how that works. What's the number one fear people have in the marketplace? I'm talking consumers, 401k holders, the average person in the public. What is the number one fear? Okay. So John, what we're doing is we're going through the basics of how the trade works, and then we'll evaluate some stocks in Icon and show you how those work. And we're talking about how to use systems to evaluate them, right? Fear of missing out, the stock will plummet. Losing money, that is right. Loss, right? Yeah, absolutely. People are worried about losing. So the nature of the options market is that we then, because of the risk of losing money, because of the risk of losing in the market, we end up buying insurance. Hedge funds, market participants, they buy put options deep out of the money. Selling those options in the form of a spread allows you to capitalize on that insurance premium. See, insurance is something that we actually can carve out strategies in the options market to get paid cash flow on. Just like insurance companies that sell health, home, auto, life, earthquake, cell phone insurance, whatever it is. Selling the iron condor on the short side with a low delta, what you're essentially doing is you're saying this to the market, and this is always very important to me. What is my edge? Here's the edge. You're telling the market that if the market crashes, you'll pay up. Okay, you'll lose money. You're telling the market that if the market crashes, you'll lose more money than the times you win. That when the market doesn't crash, you get to make a premium, you get to keep a credit, you get to keep a cash flow, but when the market crashes, you do lose. Okay, so this is an inverse relationship on reward to risk. You're going to get paid up front and then keep the capital if the market doesn't move too much. Here are the rules that I use, guys. I want you to write them down. These are the rules that I teach people how to use this spread. We sell a 10-point wide spread, okay? We receive a minimum of 50 cents per spread. That's got to be your minimum credit that you pick up. If you don't pick up, hold on one second, make sure I'm seeing this. If you don't pick up 50 cents per spread, then it's not worth it. You're going to use RUT index options. You can also use options that have weeklies. This works very well on really high liquidity stocks like a Priceline, an Apple, a Google, but your delta may need to go lower. The delta per contract needs to go down to 0.1 delta on both legs, and then the cash flow theta rule should be 30 days of time okay, to 60 days of time. Now take a moment and write down the rules for how we build this, and then type in rules when you've written down the rules. Let's give everybody just a minute to write those down. Okay, Frank's got it. Mike's got it. Michelle has it. Very good. Okay, very good. Give you just a minute. Got a few of you that do have it done. Are rules important? Well, that's a rhetorical question. If you don't have an exact design of how they work, then you don't have a strategy. Frank has a great question. Why not SPX? Simple answer, Frank. The RUT has made more money in back testing, in real testing, in forward testing. The RUT, for whatever reason, because of the volatility of the 2,000 stocks, has been slightly more profitable than the SPX, cash settled. That's what we found. Yep, that's right. Yep. Now, the big one with the RUT that I think is an important thing to say, if you don't know the product, there's something called a cash settled European option. And that's an important part of the product. See, when you're a new trader to the options market, if you go into individual stocks, you do run assignment risk. You do run, certain different kinds of exercise risk, fees that go along with that. So I prefer cash settled index options, European style. Now, some of the options in the futures market also apply to that. The rules actually work out really well. In the futures market, options on the ESE mini contract are fine here for this as well. But the real key is low delta and the right time window, okay? The same system rules don't necessarily work on a 1-day trade or a 7-day trade. See, one thing that people need to understand is that you can generate cash flow in the market if you design the key nature of those strategies, and that's kind of the important thing. Here's some of the back-tested results that we've found. By the way, I tend to go into the option chain, set the delta and the mark numbers up. This is how an option chain should look. You find the delta first, that will help you find your strike, and then you build it out. Any broker interface should have delta and mark values for each option chain, that you do. I then look at the overall credit of the spread to make sure it hits my minimums. It's got to make sure that we set it to vertical, mark, get the credit fill. It's kind of a process to that, and we'll probably do one as an example here in just a minute. Some of the back-tested rules. If you put this trade on, you should make money, 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 and eventually you will lose. Now, I want you to think of some math. If you have a 90% probability of winning, you should also have a 10% probability of losing. Now, I want you to think of this. If you make money, make money, make money, make money, and you make money 9 out of 10 times, is that a good system? Okay? Is that a good system? Is that a system you feel is a good system? Very good. Frank has the right answer. Everybody say, great job, Frank. Everybody, let's all teamwork here, all working together. I love it. Say, great job, Frank. It depends on the loss. See, absolutely. So if you make 100, make 100, make 100, make 100, but then you lose 5,000, that's not a good system. If you collect 200, 200, 200, 200, but then you lose 20 grand, that's not a good system. So it entirely depends on the loss. And this is where cash flowing with the proper rules comes in. Guys, I'm a firm believer in automation. I'm a firm believer that you need to know how to manage that risk. If you don't know how to manage the risk, you can lose too much money. And, the system should work, and it does work, and it will work if you do it right. But you have to design those rules, and you have to automate the exit on those rules. Back-tested results per contract, and just so we understand the position sizing, using RUT and 10-point windows, that's about $1,000 per contract. Type in 1,000 per contract, okay? So let's make sure we're all on the same page here. 1,000 per contract. Good. Good job, Frank. 1,000 per contract. So you can do more than one. You know, it needs to be based on your account. If you only have $1,000 account, you probably shouldn't even do this at all. If you have a $100,000 account, you may be able to position size at, say, 10 contracts or something. This needs to fit in an overall portfolio design, but this is per contract. Using those rules, these are our back-tested results. January, you make 112, 122 bucks, 114, around 100, 130 bucks each time, and then in September, during that loss, you would have given back 3 times the money. Okay. Now this is with automation, and this is with an exit at the strike price to automatically take you out. Now here's the kicker: if you can't control risk, the system doesn't work. See, and let me explain a mindset, and this is what we talk about. This is why we log into, MetaStock every day to look at our charts and backtest numbers. This is why we evaluate the market daily. This is why we have to run this like a business. Because the way that we make money as traders is to own the risk, to control the risk, to manage the risk, and to take on the risk. I mean, guys, without doing that, you don't have a system. You have to generate the edge in the market by management. And that's where getting out and hedging the contract when it moves against you is a critical component. That's how it works, right? October, November, December, you should profit regularly. Now, on any given year, and by the way, on any given month, the probability might be 90%. You could have that 10% hit twice in a row, 3 times in a row. That's where losses in a row are definitely something you have to factor into your money management. But the reality is this: you sell low deltas, you sell them 30 to 60 days in window, and if you do it consistently, you should generate income. Don't overthink it. If you want to be a trader, you can. You have to build those skill sets out: back testing, design, money management, position sizing, and all that kind of stuff. Now, the average ROI expectation should be about 9% a month. Traders who try to triple their account every day, they're just novices that really don't understand the numbers. This is really aggressive, and this is just on the position itself. That's return on margin, not even return on account, right? Make sure you understand that. Because if you have a certain amount of capital in your account, you're not going to use all of the capital for one strategy. You have 100K you're trading with, you might only dedicate 5K or 8K to a strategy like this. So that's return on margin, not return on account. Those are different calculations. But it's a good trader. It's a good strategy. There's no question about it. And here's what I want to do with you guys right now. I want to go into, and by the way, everybody, I want to tell you, I'm very thankful for you guys. Very grateful. When you're coming into a new group and you don't know the audience, it's kind of, you're trying to conceptualize what level of education do they have in terms of trading, how long have they been doing this, all that kind of stuff. So I want to say thank you, and everybody say go team here. I know that you guys may not, know me yet, but I'm a big believer in positivity and building this out. So thank you for having me, number one, and thank you for guys for participating. This is great. Okay, in the questions, everybody say go team. Let's do a big rah-rah moment. We're here to help each other, right? And I want you to know, I get passionate about almost every product and every strategy that we have. They're very, very exciting. Okay, and Alan, thank you. Nyan, thank you. Peter, great to have you. So let's take a look at a couple things. Number one, let me show you. You're welcome, Frank. You are so welcome. All right, a couple things. I was looking. It's funny how much I had planned. Now that I think through it, guys, honestly, I think I have enough to present to you guys for about 4 hours. Do you guys want to do this for 4 hours tonight? Jeffrey's like pulling his hair out right now, by the way. Yeah, Jeffrey's like, no, we're not doing 4 hours. No, I have stuff. Oh, man, I'll show you. I'll give you an idea. So we're not doing it past, I'm telling you right now, we are cutting it at an hour. So I'm going to get to the key takeaways. Number one, there's a couple of things we're doing with MetaStock, and I want you to understand this. Jeffrey and we're working on developing one of my proprietary fundamental screeners into MetaStock that will combine to technical analysis, okay? And Jeff, I think that you should have some of the information of these guys soon on that. So absolutely excited to get that built in. Give you an example. Like when we pick a stock, we keep a watch list of companies that we think are really great for options trading. And they, covered calls, naked puts, vertical credits, the whole thing. There's a lot of different reasons why we do it, and we have different indicators we look at. Jeff and I are working on building that as an indicator into MetaStock at some point. I have no idea when. It's probably going to be some time, but we'll keep you apprised on it when I get a chance to come back, maybe here in a couple months. Number two is I have a research tool that we use, okay, that whenever I go and analyze a company, like for example, Apple is a company I watch and keep track of very, very often. Whenever I go and use Icon or MetaStock to go and evaluate a company, and I decide, okay, now it's time to trade, I actually will then go plug the company into one of my research tools, find the appropriate strategy down here at the bottom, okay, and then I'll plug it in and it will run some numbers for me. Now in cash flow, okay, and everybody type in cash flow right now, cash flow. In cash flow, there's a lot of different strategies. I like covered call, naked put, bull put, bear call, iron condor, short strangle, and time spreads. I use them all for different reasons in different ways. Now a time spread, diagonal, calendar, all of those different forms, all of the different nature. So the basic idea is this. Whenever I want to do a trade on something, I'll come and I'll look at the chart. Okay, I'll evaluate what the chart is doing. And we'll pull up the news. We'll look at some of the fundamental metrics. Do you guys use Icon, by the way? I was asking Jeff, how many of you guys use both MetaStock and Icon? So kind of curious to know this. Are you guys using the Icon and getting the data and that kind of thing? Man, that's something to ask Jeff about. Or Jeffrey, do you think you could get these guys a link in the follow-up that they can install Icon? Yeah,
Yeah, for sure.
I mean that would be
Actually,
great.
if you have MetaStock RT, you have access to what we call Zenith, which is the white labeled version of Thomson Reuters Icon. And if you have MetaStock DC, you won't have access to it, but I can definitely provide you some more information on Thomson Reuters.
Well, because
And the
I got to
Zenith.
tell you, Jeff, and I'll let you kind of come in as well. The reality is, I think both are very valuable. I mean, there are times where I want to dig further into the more advanced tools with Metastock Pro, but Zenith and Icon, I've always called it Icon, just for data, for news, for all that kind of stuff, it's very, very helpful. So I would recommend every one of your users install Icon. Would you agree with that?
Yeah, absolutely. I mean, just the fact that it's all of Reuters news is worth it. It's such a great product. It surprises me we don't have more people that use it.
Absolutely. Absolutely. All right, very good. So I just wanted, yeah, very good. So not a lot of people are using that right now. I would recommend it for news because, guys, whenever I look at something, the Russell is a very different animal. Other companies, I got to look at the news. I don't know about you guys. I know some traders are so technically minded, they say news doesn't mean anything, and I get it. If you're a scalper, you do an automation, I get that there are certain systems where that is true. But I'm a believer in macro news. I'm a believer in economic news. I look at currency markets. I look at global markets. Because to me, trading is not just about one trade. It's about keeping an eye on the global economy, so that I can have a better feel for what to do with my capital, with my investing in general, with my overall approach to investing. That's a cool thing. And that's where like news feeds, from Thomson Reuters, that's the, like I've said, the crown jewel of news in the marketplace. So definitely recommend you guys get that going as well, get that up and running. Now, once you look at a chart, there's a couple of things that we need to look at here, okay? We need to look at the current price of the Russell. We need to then identify what levels our option trade would build out. And we have our rules. You guys wrote those rules down. You go into a brokerage software, right? There's basic things, and let's make sure we have this. We said 30 to 60 days. Now, I'll tell you how you decide where to lean there. If you are a more conservative trader, go closer to 60 days. If you can manage the trade, go closer to 30 days. So on the rut right now, we have 29, 36, 44, and 64. This would put me at either the 36 or 44. I have no problem using weeklies on an option chain like the RUT or the ES or the S&P that has that kind of liquidity there. So I'm going to open up this 36-day option. We then focus on building the trade out with delta, okay? And let's come on down here. Now I gave you the rule. Let's see who's been paying attention. What was the delta we were supposed to sell? What was the delta we were supposed to sell? Very good, 0.1. That is per contract, by the way. Alan, Nyan, and Frank, very, very good. So then we find the delta here, okay? There's a couple ways you can do this. If you have analyzer tools, risk profile tools, you can do that there. But what we're going to simply do is we're going to build this out spread by spread. Actually, see here, 0.1. Got the 1280 strike and the 1270 strike. Now this would be a spread that would get us a 60-cent credit, okay, 1 and 1. We can build this as a vertical on its own, or if you know you're going to do all of the contracts together, you can then go to the 10 delta down here, sell, and buy. Now here's our spread. Now there's a couple things that we need to understand here. And let's make sure we're on the same page. If you put this trade on, okay, you can only make $137. You can lose $863 if you don't manage, you don't do anything, and you don't know what you're doing. Now, does that make anybody nervous? Does that make you feel like, man, I don't know if I want to do that? Good. Okay. Okay, type these things in because this is my mantra. I own risk. Okay. Type in I own risk. I'm using 0.1 delta, Peter. Type in I own risk. Because if we don't acknowledge that, then we're not understanding trading. Okay, I trade risk. Okay, now I trade risk. Okay, that's right. And I profit from risk. Here's the cookie, here's the key, here's the whole mindset behind this trade. You've got a big window here, okay? You've got the 1460 strike, you got the 1280 strike, okay? Looking at a chart here, what that's going to be is that you have all the way down here to this level, you have all the way above the top right of the entire chart. You have about 60 points on the high side, and you have about 100 points on the downside. The Russell 2000 would have to move 100 points down in the next 36 days for you to lose. It could do that. It probably won't, but it could do that. Okay, the Russell 2000 on the upside would have to move up, and let me make sure I've got the right strike. I have to go to the 1460 strike. So using the delta, that means it would have to go from 1382 to 1460. That's 80 points on a 1400 point index. Okay, 80, I'm doing some quick math. It's about, what is that? 80 divided by 14 now. Okay, 7%, 6-7%. So we have cushion, okay, but we also have risk. If you put a trade like this on, you can build consistent profitability in the market if you can manage the risk. If you over leverage it and you try to run an entire account on just doing a trade like this, that's a fool's errand. You haven't done your due diligence on money management. Now there's some things, and this is where I asked Jeff if I could do this, guys, and I want you guys to be able to get a copy of this spreadsheet. This is where before I take a trade, okay, I come and put all these things in. Okay, now let's see here. The price of the Russell. This is the spreadsheet. This is the research I do to kind of keep me organized. The price of the Russell here, let's take a look, is 1382. Make sure you write some of these down for me. So as I toggle back and forth, it's 1382. We're going to use the April option, 36 days to expiration. The call strike was 1460. We had a 10 delta, 1470. Okay. Now the short put strike, okay, we had a 1280. That was also a 10 delta, 1270. And our net credit was 137. Buying power was 863. And let me zoom in and help you understand. I'm a firm believer in trading that things have to pass my rules. Okay. So this is all just data. And actually, let me get the ATR on this one real quick. ATR is 15. Okay, 15. So when I build one of these, I need to know that the buffer is at least a certain distance of ATR away or more. It has to be at least 3 ATR. I prefer it to be 5 ATR from the price to the strike price. Okay. I then will set an alert and I will have an exit either manually or hard out automated at that point. So at the 1460 strike, I'm going to have an alert at 1452, right? Then we've got the 1280, 1270. Now we've got more cushion on that side. We have nearly 6.8 buffer on the ATR. These are back-tested rules that I've personally, set for myself. You guys can have a copy of this if you want one. The credit then gets evaluated against the spread, okay? And then I have to look at this concept called ROID. Now, we don't have time to go through the trading on that, but everything is rule-based. Everything is designed. Everything must pass my rules before I go through it. Now, by the way, guys, would you want a copy of this? You want a copy of this spreadsheet? Okay. Gotcha. Now, Jeff, let's see here. You can download one here, I believe. Send to all. And I'll put it in the chat as well. Jeff could also include that in the show notes if he wants to. You could also email me if you want one, tim@tackletrading, and let me know. But yeah, I've even have a short video on how to use it and whatnot. But the Condor is one strategy. The Tackle 25. We're doing a lot of really cool things with MetaStock right now. I love, the opportunity to come in and teach you. Quite frankly, Jeff, I think we're out of time here. So I want to bring Jeffrey in real quick as I, open up for Q&A and whatnot. Jeffrey, what an hour.
I thought you were going to go 3 more.
I could go for 4, and I'm not joking. I could easily do 4 hours. When I do live ballroom presentations, Jeff, I fly around the country, and once in a while I'll go teach people, new traders, investors, how to do this in workshops. We do 3 days, and it's a 24-hour presentation.
That doesn't surprise me that much, actually, but I'm sure it's great. I'm sure you did good. That was a great webinar, by the way.
Yeah, thanks, man. Thanks for having me.
I've always been, I'll have to say, I learned a little bit today. I've always been a bit of a put buyer and a call buyer, and it's always interesting to kind of get a little bit of a different point of view. In any case.
Well, here's the thing about trading, and there are systems where buying calls and puts are definitely a valuable thing to do. But what I've found is with most traders don't have those systems. You have to be very good at reading volatility. You have to understand, and really, having an open-ended risk graph is a wonderful thing to do. And with some of your capital, you want to do it. But really, it's like anything in life, Jeff. There's so many different ways to do it. All you got to do is find your niche that fits your style the most. And I've found for especially busy people who are trying to get trading like as they do other things, because guys, you can trade this stuff. You have the best tools in the world. Cash flow strategies to me are a wonderful technique, right? Because then they can still work their job, they can still run their company, they can still go bike riding with their kids. It's a great approach. Yeah, I'm surprised not more of you guys have the Zenith on there, but you said that they should have access to that. Is that right?
All the real-time customers, I did put a link in case you don't have MetaStock or you want to get set up for we have like an extended trial where you can literally pay for 1 month and get 3 months access. The link for that I put up a little bit earlier. It's metastock.com/tackle trading 3-for-1. So I'll put it back in the notes right here. I had a question for you, Tim. I don't see a lot of
Sure.
questions coming in, but I had one. Do you still have that that option keyed into Thinkorswim?
I do.
Can you? Is it easy for you to display? I only use the Thinkorswim mobile client. Is it easy for you to display a risk graph on that?
So watch this. Once you build it, you can save the order. You can also send it to the Analyze tab real quick. I've been using TOS for a long time. And then
Yeah,
you
that's
can
what I
then
wanted to see. That's what I
you
wanted
can
to see.
then model it out. Yeah.
Okay, cool. Does
Yeah.
anybody have questions for Tim while we've got him here?
And then, by the way, here you can then start to understand your actual risk at where your alert is. So, for example, Jeff, risk profiles are very important for option trading. You know, for our exit for our rule for the covered or this trade right here on the Iron Condor would be 1452. So then I can go and type in 1452, and I can identify if I get out at my exit, I only lose 277 instead of the 860 or whatever it was that we were looking at. This is where, I mean, we're talking about stuff that we get into that takes a lot more time to build out than we have tonight, but you know, there's some really cool things that you can do here.
The comments are coming in. Well, I don't see a lot of questions, but it was a great webinar. We're getting a lot of feedback that it was a good webinar. So I want to thank you for coming in, and the next time we'll schedule you for 3 or 4 hours.
I doubt it. I think these guys would get tired of me. I believe there's no question about it. Thank you very much. And let's see here. I actually did have 2 questions here. Love toss, absolutely. When do you recommend exiting the IC? At your alert, Mike. So you should not let it move in the money. You should have an automated profit target set to take the credit back as well. And everything must be position sized. And let me make sure I'm very clear on this, guys, because I think we have an obligation as traders to help each other out. And I'm going to tell you, if you've never tested an Iron Condor or paper traded an Iron Condor, you should not trade this live. If you go out and do that, that is reckless. Okay, one of the mistakes traders make is they rush and they try to jump in because they get excited about the dollars and get in action, and I get it. Take it always through a process. Those of you who've been trading for a long time, it's always a process, right? You know, and new strategies, new ideas, new approaches, new techniques. We should always embrace education. We should always embrace learning. Great communities like Jeffrey has here at MetaStock. I mean, that's what you guys have the ability to do. But make sure before you ever take anything live, test it, design it, money manage it, and do it correctly. So anyway, that's a big rant. I love it. All right, guys. So if you want that spreadsheet, I put it in the chat over here. Jeff also has some other information for you. Jeff, I appreciate you, man. I'm going to go and cook dinner. I'm actually in charge tonight. So we're all done here.
All right. Have a good one. Thanks for coming, everybody. And we'll see you at the next one.